Welcome to the midweek macro. It is Wednesday, the 11th of February. Yes, I am live from Asuncion down here in Paraguay. Travels went well. It is currently looking just briefly at the weather. It's 34 degrees in centigrade. For those in Fahrenheit, that is a paltry 93. So yes, very toasty down here at the moment. It is 8 o'clock here, so I appreciate that it is going to be 5 o'clock, 5 o'clock, 6 o'clock Eastern. So just wrapping my head around everything that's been going on as well. We'll of course have a look through the markets as we usually do. But first, before we crack on with that, a couple of bits of housekeeping. First of all, is to say that on Friday, the 20th of February, international expert Adam Fired and myself, we're going to be hosting an asset confidentiality webinar. It's going to take place at 7 o'clock Central Time. We're going to be exploring and talking in depth about protecting the confidentiality of your assets. So we're going to be looking at how to do that in stocks. Could be gold, of course, Bitcoin, property, and much more. We'll also be talking about various strategies to internationalize your assets while enhancing privacy and security as well. If you're unable to attend live, then not a problem. All you have to do is simply sign up and you will receive a free recording. The webinar is completely free. There is no cost at all to attend. It's Friday the 20th of February, 7 o'clock Central Time. Again, if you're not able to attend and you sign up, you will get a free recording of the webinar anyway. There's going to be a link to that in the post that comes with this. So if you're interested, just make a note. And when you get the post notification for midweek macro, sign up there. Again, as mentioned, 7 o'clock, Friday, 20th of February. It is completely free. And we're going to be exploring asset confidentiality. Of course, Adam has previously sponsored the Contrarian Capitalist and has also appeared on the show as well. I'd also like to draw your attention to the podcast video that came out the other day with Tom Luongo. I've had some fantastic feedback on YouTube about that. Tom spoke ad nauseum about the prowess of power polling, especially with midterms in the US this year. Spoke briefly about silver as well and why the USA has to win at all costs. And also this week, as promised, it's been a bit of a heavy week in terms of writing, which is good because I know that more and more people are asking for that. So again, I would go and suggest you look through your inboxes. Do check your junk mail and your spam email as well, just in case, because I do see that, or have had reports that Contrarian Capitalist emails are going through to people's junk folder and spam folder. So just bear that in mind. Things that we've looked at this week, we've looked at Jacob Fugger and the power of simple portfolios. That was an article that's free for everyone. That came out on Monday. On Tuesday, we then had a look at Contrarian Company Deep Dive number 2. So we looked at an emerging silver producer and whether or not they will finally break through. And released earlier on today was the modern Fugger portfolio. So again, that looks at the dynamic of what's going on in and around the world at present, and then looked at the modern version of a Fugger portfolio. Again, if you're not sure who Jacob Fugger is, I highly recommend you go and read the post from Monday. That is free for everyone to read. In effect, he's arguably the wealthiest European that ever existed in comparison to the economy at the time. So plenty of excellent reading this week on the Contrarian Capitalist. So let's have a look. Before we have a look at the charts, actually, we should point out the Japanese election. And it's important to talk about that because that will have an implication on everything else that happens moving forward. So I mentioned on the commodity wrap and the market wrap last week that Sine Takaichi, I think I pronounced that right, called a snap election. She called it for Sunday, the 8th of February. And the reason being was that she had a razor-thin majority in, I believe, the lower house in Japan. And the idea was to ride off the buoyancy that she's creating over in Japan and to try and improve that thin majority, basically create a larger majority. And she's done exactly that. Now, that's important because what that means, I should point out that it's a supermajority. That was the word I was looking for. Supermajority of 315 seats for the LDP, I should say. Apologies if I'm making a lot of mistakes. I'm pretty jet lagged, lack of sleep from last night's traveling as well. So my apologies if I do come across a bit this evening. So the LDP, so it's a 315 seat supermajority. Now, this is important because what it's going to allow her to do is to push through a lot of financial reforms. And that's why I'm going to take you to the Nikkei index. And we have seen already this week, again, it is Wednesday, it's just gone 6 o'clock Eastern. We're seeing here that so far this week, what the Nikkei's done is it opened the week at 57,280. It's then reached a high of 62,596, which is, absolutely bonkers, if you ask me. And it's now currently sitting at 58,174. So it's already creating a very interesting candle for the week. The thing that Japan is not going to be able to do, try as they might, is they're not going to be able to save both the bonds and the yen. They're not going to be able to do that. Santiago Capital's Brent Johnson was speaking about that last week, and I've heard other podcasts as well that have said very similar things. You're not able to save both. If you're going to try and save one of those two, the chances are you are going to go and save the bond market and not the yen. Also, what the PM is looking to do is to conduct major reforms. So in effect, what she wants to do is take the stress off of the BOJ and also the bond market. Now, from what I've read, that's going to involve a lot of yen printing. And of course, as we all know from watching this and from being a long-time subscriber to the Contrarian Capitalist. By the way, if you are yet to subscribe to Contrarian Capitalist, contrariancapitalist.substack.com, you can become a free subscriber. Do give the channel a go before becoming a paid subscriber. What Japan will do is they will print. And if you're going to print and then you've got more currency units chasing the same amount of goods or fewer, then simple supply and demand, that means that things priced in yen, for example, so we're thinking gold, silver, etc., regardless of the shenanigans of the paper markets, those sorts of things are going to go up. So as the fiat currency devalues through, again, currency printing in this case, then what's going to happen to real assets? Well, they're going to go in the opposite direction. So Japan is really a country to watch out for at the moment. I know there's a lot of dynamics and we can spend all afternoon talking about the yen and the bonds, etc. But we've got a lot of other markets and a lot of other news to go through. But do continue to keep your eyes on Japan. And if you're going to take just one lesson away from this video, is that if your current government is going to continue to print, then that's going to devalue the currency. If your currency is devalued, then yes, real assets or things priced in those fiat currencies are going to go in the opposite direction. So watch this space. Talking of debts and people printing away, the US has added 481 billion in debt in 3 months. It is not sustainable as far as I'm concerned. It's easy for me to say that as a Brit, but it does not look sustainable. However, if any country is going to defy the odds and juggle its way around or try and kick the can down the road for as long as it possibly can, then that is likely going to be the USA. Again, we'll just go back to what I've just said, that if they're going to continue to add debt and add debt and add debt, and it's not sensibly being spent, so it's not productive, then again, same thing's going to happen. This is why we're seeing partly some of the reasons why we're seeing big rebounds this week in commodities. We will get onto that when we look through the markets. It also does mean that over the last 7 months, the US government has borrowed an incredible $2.28 trillion. That's $2.28 trillion. And there's no sign of that stopping anytime soon. I'll put a link into the jobs report as well in a nutshell. Again, this is US talk, so historic negative jobs revisions, 1 million fewer jobs added in 2025, only averaged at 15,000. Again, I'll put a link to that. I've not had a chance to properly read through that, but again, that's important market information to bring to your attention. So again, that's what I'll do. I'll add that into the post as well. And finally, here we've got public trust in US government nears historic lows. Now, I don't want to sound like I'm picking on the USA. I get told that I pick on the USA, and I get told I pick on Russia quite a lot as well. I don't mean to come across like that, but I am aware that most contrarian capitalists, most of the audience, you are from the USA. So that's why it's very US orientated when we do these midweek macros, but also because the US is such a big market that not just in terms of financials, but politics and so forth. And normally what happens in the US does have a reverberation around the world. So that's why there's a lot of US focus. And yes, if you ever felt like I'm picking on the USA or Russia, my apologies. I try not to come across as picking on certain countries, apart from my own, of course. If it's England or the UK, of course, I will pick on it because, well, I feel like I have the right to. Anyway, waffling aside, public trust in US government nears historic lows. So it's the corruption perception index, according to this article here on Zero Hedge, the CPI. Okay, there's already a CPI, but we'll take it anyway. So the US fell down one spot to 29th place out of 182 around the world, with a score of 64 out of 100. So yes, it's his lowest ever rank in terms of public trust in the US government. I think that's, considering, again, 29 out of 182, I don't think that sounds that bad, to be honest. But I'm sure it's not just citizens of the US that are having similar challenges at the moment with regards to trust in their governments. I know that from, again, going back to a UK perspective, that apparently it's rained every day so far in 2026 in the UK. Who knew? But also, when it comes down to energy policy and the prices that people are paying for their energy and a lot of social unrest, certainly my trust in government has decreased rapidly over the years. Again, this is also why we like to preach Plan B, of course, on the Contrarian Capitalist as well. So it is, life, in my opinion, is about making sure you're happy, healthy, get yourself that Plan B option, get yourself that Plan C option as well. I'll link to all of these articles again in the post that comes with this midweek macro. Let's go around the charts. We will stick with indices first, and we've got the S&P 500 here. We have it at 6,941. I mentioned this in the market wrap. My stance on it hasn't changed. It seems to be range bound at the moment. I am not calling for it to go down for those that follow the market wrap, and for those that are paid subscribers. You will know my traffic light system. You will know what my thoughts are for Q1, Q2, Q3, and Q4 for this current year. Looking at the chart at the moment, again, the averages, so the 20, 50, 100, and 200, they seem to still be trending up, but it seems to be waning. So really, I would say this is a case of watch this space in the S&P 500. If you look at the NASDAQ, now the NASDAQ gives me a bit of cause for concern. It is up on the week. It is at 25,201 at the time of recording. But again, I'm looking at these moving averages. It looks like they're starting to reach that apex, and they might start going towards the downside. So that is worth watching. With the Dow Jones, again, it is up on the week. Admittedly, it's up by a whopping 5.7 points thus far on the week, so 0.01%. But it is at 50,121. Again, looking at these moving averages, they seem to be trending to the upside. That doesn't mean it's just going to go onwards and upwards. It seems to be trending in the right direction. And there's been a lot of results and earnings and so forth, and a lot of mixed signals. My layman's terms on markets is quite simple, is that, again, if you think that your fiat currency is going to get devalued, things priced in that fiat currency are likely going to go to the upside. That includes equities. So there you are. That's a very layman's terms. Doesn't mean it's going to go to the upside. But again, looking at these moving averages, the one that would give me a cause for concern is the NASDAQ. S&P looks range bound to me. Dow Jones seems to still be trending up, but it'll be interesting to see how long that will last. Looking at the VIX index, so again, that measures the volatility of the S&P 500. That sits at 17.65. So it's completely bog standard. It's normal volatility to be expected. So there's really nothing to write home about there as far as I'm concerned. Now, interestingly, is that dollar index. That dollar index is taking a big hit so far this week. It is down 0.774. It currently sits at 96.907. Again, in the market wrap and with Paul Kiker of Kiker Wealth a couple of weeks ago, we mentioned that at the end of the month, at the end of January, the dollar broke a big trend line, i.e., it gone past that trend line, and pretty much, unless you're complete contrarian, which we are here on this channel, really the main way was going to be down. Now, for the last week, that's actually a tick up in the Dixie. So again, let me just highlight these three scenarios. These are the things to watch out for with regards to the dollar index. Number one, that trend line has been broken. Okay, that is that. So we all know that trend line has been broken. Again, you need to go and look at a monthly chart for that, or go and watch a video with Paul Kiker of Kiker Wealth. That trend line is broken. So we have three options. Option one is for the dollar index to continually slide downwards. So a very managed move to the downside. Possibility number two is that it jumps off a cliff and goes to the downside. So something breaks, all hell breaks loose, and we're off to the races, but in the wrong direction. That's option number two. And option number three, which is arguably the contrarian option, is that it actually reverts to the upside. Looking at what I can see, again, looking at these moving averages that are continuing to trend down, I would say that it's one of the first two, but we should never rule out number three. What we think and what we want to happen in the market and what actually does happen sometimes are two completely different things. But again, looking at, the moving averages, looking at the way this is trending, it looks to me that dollar index is trending to the downside. Of course, we've covered the Nikkei as well. That'll be interesting to see where that finishes on the week. But that's an incredible spike, pretty much, up, or was up just under 10% before that is retraced, and that is still up on the week. Moving over to commodities, and what we are seeing here is in gold, we're seeing 5,065. Moving averages, again, trending to the upside. That 20-day starting to cool off a little bit, but I would say the trend is your friend. Again, on the traffic light system, I've chopped and changed in the last few weeks, and I will hold my hands up and say that maybe I've been a little bit too cautious, but that is what it is. I'm not going to be right on that 100% of the time, and I'm also not afraid to hold my hands up and say if I've made a mistake. I've remained relatively neutral on most things in the short term. Quite a lot of volatility, of course, as we know, in the last couple of weeks in commodities. But thus far, gold is to the upside. It is up 2%, $98.7 on the week, and sitting at 5,065 at the time of recording. Let me bring up silver. So silver is up also on the week, up 7%. It currently sits at 83.51. Again, I think that there's a lot of challenges within the silver market. The supply and demand of physical is well told. There's also a lot of paper shenanigans that I don't think is going to change anytime soon. I am proud and happy to announce that Vince Lanci, I believe that's how I pronounce his surname, Vince Lanci of VBL's Ghost, he has tentatively agreed to come on the show in March. I can think of no one better to go through the plumbing of the markets with regards to silver and other commodities than Vince. So again, Vince, VBL's Ghost, has tentatively agreed to come on in March. But silver sitting at over $83. Let's bring up platinum. Platinum is slightly up on the week. It's got a red candle thus far, but it is up on the week. It is sitting at $2,116. Again, for those that do follow the commodity wrap, and for those that are paid subscribers, you would have seen the big candles in the last few weeks on platinum. Heading over to palladium. Palladium, again, also slightly down on the week, trading at 1,690 at the time of recording. It's down about $7 on the week. And heading over to copper, we look at per pound USD on the shows, excuse me, and it is back over $6, 602 at the time of recording. And WTI is up on the weeks, up 2%, 2.1%, sorry, up $1.37, currently trading at 64.86. Oil's very interesting market, as you well know. I'd highly recommend you go and listen to the podcast between Eric Townsend and Dr. Anas Al-Haji. That was done on Macro Voices last week. Highly recommend you go and listen to that. Dr. Anas Al-Haji is arguably one of the best people, I think, to follow and listen to within the oil and natural gas space. He was filling up with loads of information with regards to why there isn't an oil glut and looking at all the different supply and demand dynamics. I was talking about the Middle East, looking at Hajj as well, Ramadan, and the effects that that has on oil and oil production and what's likely to play out between now and the midterm. So I'd highly recommend you go and listen to that. Again, if you go to macrovoices.com or look at your podcast platform, I'm sure you will find it. But we do have WTI sat just under 65 at the time of recording. One more market to quickly look at. In fact, two more markets. I will look at uranium, which I don't normally do, but I will look at it. So again, nat gas, nat gas taking a bit of a beating, down 11.67%. Again, only a couple of weeks ago, it was, this is nat gas spot, I should say, Henry Hub. Only a couple of weeks ago, it was sat at a high of $5.80. It is now currently sat at $3.90. So that's taken a bit of a haircut, to say the least. I've been a bit layman's with that. I've just attributed that to warmer weather in the US in the last few weeks. I understand there's a lot of other dynamics involved in that, but I've been layman's about it, and that's proven to be right thus far. One other market to look at, and again, I know it's relatively opaque, but that's going to be the uranium futures. We know that spot took a bit of beating last week, which is why you saw the U308 futures, which is again what we look at on the Contrarian Capitalist. That's why you would have seen that take a beating. But uranium looks like it's rebounding slightly thus far. It is currently sitting at 88.70. Again, that is the U308 futures. That is on the COMEX. And I guess I do get all the charts from tradingview.com. I understand that there can be some discrepancies in the charts every now and then. Just a couple of other articles to fill you in on, and really it's subjects that we need to sort of have one eye open for, in all fairness, and they are that the EU, France and so forth, again, they're sort of banging that Russia bell, saying, big bad Russia is on the case and they're on the march, and we got to, prepare for war with Russia. So it's actually the French defense chief says Europe has until 2030, cites Russia as biggest threat. With all due respect, having just come from Europe, the biggest threat to Europe is Brussels. There you are. I said it. There you are. You can share that as a snip with all your social media. The biggest threat to the EU is Brussels, in my opinion. Then underneath that, again, this is in the Newslink section, Macron urges Europe to start acting like a world power. Again, go back and listen to the episode with Tom Luongo. There's 4 kind of superpowers in the world: USA, China, Russia, and the EU. And yes, 3 of those don't like the other one. So I think you can figure out who that is. So I think Europe's time has been and gone, personally. Then the last one, again, is just looking at back at the Japanese election. And that the reason I've put that in, even though we've discussed it, is good old friends over at the BBC with the way that some of the media have reported the Japanese election and the election results. It's almost like they are very concerned, and they're sort of going to the, we've got left-leaning mainstream media not happy about in effect a relatively right-wing result in a different country. But of course, it's all part of a bigger agenda. And again, go back and listen to that episode with Tom Luongo. So there we are. Plenty going on. I will be back tomorrow. I did manage to finish off Contrarian deep dive on a copper company. So that will be out with you tomorrow morning. I'll be back with a commodity wrap on Friday. Of course, a market wrap on Sunday. Of course, got to try and fit in a mid-month macro as well. So watch this space. Plenty of content coming your way. As always, if you're yet to subscribe, please do so. Contrariancapitalist.substack.com. You can become a free subscriber, give the channel a go, and then you can look to upgrade to paid. We've got a couple of options on paid. You can do it per month, which is about $11, I think, give or take. You can do annual, which works out at about $9.20 a month, or you can become a founding member. So that's a one-off lifetime investment. Again, if you're in a business or you run a newsletter or anything like that, speak to your tax advisor, speak to your tax accountant, because I would imagine that a subscription to, say, the Contrarian Capitalist could be classed as a tax deductible expense. So again, chat with the relative professionals on that. And we'll finish off with where we started. And again, that is best by mentioning that webinar with Adam Fired. We're going to be talking about asset confidentiality. We're going to be looking at stocks, gold, Bitcoin, property, and much more. Plan B, I can fill you in with my Plan B and Plan C updates. The webinar is completely free. It's Friday, the 20th of February, 7 o'clock Central. If you're not able to make it live, do not worry. Register anyway. You will then get sent a free recording of the webinar once done. And again, the link for that is going to be in the post that comes with this midweek macro video. I'm going to go back and turn the aircon on because it is absolutely roasting down here in Asuncion. Have an absolutely fantastic week. That deep dive number 3 will be with you tomorrow. I'll be back with a commodity wrap on Friday. Have a fantastic week. Take care and speak soon.